Good morning. You're watching Market Cafe on ET Now with me, Shreyansi Singh and Snehisha. And over the next 1 hour, we'll take you through news and updates from within the country as well as across the globe, tell you which stocks you should keep on your radar and tell you what the brokerages are saying as well. Lots to cover on the show, Snehi, but let's get started by looking at the international handover.
Absolutely. And Shreyansi, well, after being a couple of days in the red, Wall Street was back in the green. And how, right? Because a good run coming in on Wall Street yesterday when you look at it on an intraday basis, with stock futures inched down in an overnight trading after the major averages posted their first winning session in 3 days. And in extended trading, Victoria's Secret plunged 25% after posting mixed quarterly results and issuing disappointing guidance. Now, all major averages finished higher yesterday following back-to-back losing sessions. The S&P 500 rose 0.5%, Nasdaq added about 0.6%, and Dow gained nearly 76 points or 0.2% uptick coming in over there also. Now, 9 of the 11 major S&P sectors finished higher, led to the upside by the utilities. At one point, New York Community Bancorp tumbled more than 40% during yesterday's session, but it finished with a 7.5% gain, so a quite volatile session for that one after announcing a $1 billion capital raise. Now, Apple continued to fall. It fell for a 6th consecutive day, bringing its weekly losses to nearly 6%. Investors monitored the first of Fed Chair Powell's appearances on Capitol Hill this week for more insight on the path ahead of the interest rate cuts. As we move ahead in the show, we'll tell you exactly what the Fed Chair has said in his appearance at the Capitol. But Wall Street is also on the lookout for the latest jobless claims data and trade balance and consumer credit data for January. This comes ahead of February's closely watched jobs report that's slated Friday morning. And earnings from Broadcom, Costco, Wholesale and Kroger are still on the deck. So, well, on the back of that, quite a decent show coming in from Wall Street. Let's shift focus and let's talk about European markets because a rather good show coming in from Europe as well. A sea of green across my screen when I look at it, and European markets bounced back to close higher yesterday as investors in the UK digested the 2024 budget statement. The Pan-European Stock 600 provisionally closed with an uptick of 0.4%, with most sectors and major bosses in the positive territory. Tech stocks climbed 1.3%, so those were the real winners in yesterday's trading session, with the sector also powering gains stateside, while media stocks, they fell 0.5%. Now, the UK budget was presented by British Finance Minister Jerome Hunt and contained announcements on the abolition of the non-domicile tax status as well as a reduction in national insurance as well. So, on the back of this, FTSE was up 0.5%, and when we look at other European indices, DAX up 0.1%, CAC 40 up 0.3%, and Stock 600 up 0.4%. So mild gains coming in, but gains nonetheless, Shreyansi. And when we talk about an uptick, that's what we've seen on crude as well, right? 1% jump coming in on the back of Jerome Powell's comments. So take us through what's happening with oil.
Absolutely, and like you said, it has been a day of gains for crude as well. When you look at crude oil futures, they rose, and that was as Federal Reserve Chair Jerome Powell indicated that interest rates will likely come down this year. So the central bank is moving cautiously. So when you look at the WTI contract, that gained 1.2%, settled around that $79 a barrel mark. And when you look at Brent as well, that added 1.1%, settled around that $82 a barrel mark. Now, Powell told the House Financial Services Committee that the Fed needs to see a little more data before moving on rates. And more on that later, but US commercial crude stockpiles, when you look at them closely, they rose by 1.4 million barrels last week. According to data from the EIA, the inventory buildup is down substantially from prior weeks as refineries process more crude into finished products. Now, oil prices have been creeping higher this year, booking 2 consecutive months of gains as OPEC Plus has slashed production, and geopolitical tensions as well continue to simmer in the Middle East. Now, when you look at gold as well, gold rallied to a record, building on stellar momentum driven mostly by bets for US monetary easing. While when you look at auto catalyst palladium, that has seen quite the move coming in. That popped back above the $1,000 mark for the first time since Jan 12. So that's largely the handover coming in from commodities.
Well, with that, let's take a look at all the important cues that you need to be watching out for. Lots of macroeconomic data coming in globally from the US. We'll have the beige book coming in. Jobless claims data will be coming in. We did get one set of that data, but more will be expected as well. And the trade data will be coming in as well. Eurozone then, we just saw the ECB rate decision, and the ECB rate decision will be coming today. We did see the Bank of England rate decision come, so we'll see how that pans out. And trade balance coming in from China as well. Let's shift focus back home, talk about some corporate action. Manorama Industries will be undergoing a stock split today in the ratio 1:5, so watch out for that stock. Today is the last day to buy Sanofi India to be eligible for their dividend. National Housing Bank will be floating bonds worth 2,000 crore rupees, and the Government of India interest payment will also be taking place today. Let's talk about what's happening in the primary markets. Some action coming in from there as well. Mukka Proteins IPO will be making its debut on D Street today. And today is the last day to subscribe to the JG Chemicals IPO. Lock-in period is ending for Sami Hotels, 3% equity coming out of lock-in today. And when you look at other events, PM Modi is going to continue the slew of visits that he's been doing across the country. And today he's going to be in Srinagar. Joe Biden will be delivering State of the Union address as well. So, well, important stuff and a lot of important commentary and important data points to watch out for. So, well, these are all the cues that you need to be paying attention to in today's trading session.
Absolutely, and speaking of important then, Snehi, Federal Reserve's Jerome Powell has hinted at rate cuts possible later this year. In his prepared testimony ahead of the Senate, Powell has reiterated that the central bank is still waiting on inflation to come down to the 2% target. Listen in to what else he had to say.
Remains above the FOMC's objective of 2%. It has eased substantially, and the slowing in inflation has occurred without a significant increase in unemployment. As the labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals have been moving into better balance. Even so, the committee remains highly attentive to inflation risks and is acutely aware that high inflation imposes significant hardship, especially on those least able to meet the higher costs of essentials like food, housing, and transportation. The FOMC is strongly committed to returning inflation to its 2% objective. Restoring price stability is essential to achieve a sustained period of strong labor market conditions that benefit all. What we've said is that the committee would like to see more data that confirm and make us more confident that inflation is moving sustainably down to 2%. We have some confidence of that. Inflation, headline inflation has moved down more than 3 full percentage points now to 2.4%, as I mentioned in my remarks. We want to see a little bit more data so that we can become confident and so that we can take that step of beginning to reduce policy rates. It's a very important step. We think because of the strength in the economy and the strength in the labor market and the progress we've made, we can approach that step carefully and thoughtfully and with greater confidence. And when we reach that confidence, the expectation is we will do so sometime this year. We can then begin dialing back the restriction on our policy.
Well, all right, that's the word coming in from Fed Chair Jerome Powell. But let's stay with the commentary from Federal Reserve officials. And Minneapolis Fed Reserve Bank President Neil Kashkari, in his latest comments, signaled that the strong economic data will likely make it appropriate to cut rates only twice or even only once this year. The Fed does want to avoid a downturn, he said, and to stick a soft landing where inflation falls, but the job market does not collapse, as it historically has done when the Fed has waged a battle with inflation that's been too high.
And keeping it with central banks, then Egypt has gone ahead and hiked interest rates by 600 basis points. Not just that, on the back of the bank's currency devaluation, the Egyptian pound hit a record low against the dollar. Meanwhile, Bank of Canada kept its key rate steady at 5%, largely in line with estimates, but dashed the hopes of borrowers seeking relief, saying underlying inflation meant it was too early to consider a cut.
Well, and struggling regional lender New York Community Bank Corp announced a $1 billion capital raise, like we mentioned earlier in the show, and the majority of the investment for $50 million coming from former Treasury Secretary Stephen Mnuchin's firm. The bank stocks plunged more than 40% after reports said that the bank was seeking a major cash infusion. Ultimately, the shares of NYCB closed 7% higher for the day.
And global investment banking firm Morgan Stanley has reportedly laid off around 9% of its asset management business unit in China. This would be the first time Morgan Stanley has cut staff at the China fund unit since it bought out its local partner's 36% stake in the loss-making business for about $54 million in 2023. It rebranded the unit as a wholly owned subsidiary in June.
Well, and with Women's Day around the corner, let's take a look at the women in leadership roles at India's top regulatory bodies. My colleague Bhavya Dua filed this report earlier. Listen.
In India, women in positions of power have been breaking records and driving significant changes to the regulatory landscape. From Finance Minister Nirmala Sitharaman's historic role to Women and Child Development Minister Smriti Irani's advocacy for gender equality, the country is witnessing a transformative era. On this International Women's Day, let's look at some of the pioneering women leader stories heading our regulatory bodies. Madhvi Puri Buch, the first woman chairperson of India's markets regulator SEBI, has been a trailblazer since her appointment in March 2022. Buch's extensive experience in the private sector, including a long stint at ICICI, has been instrumental in her leadership journey. She has steered SEBI towards a more development and facilitative approach, introducing impactful reforms in various areas such as buybacks, mutual fund trustees' roles, and investor grievance redressal mechanisms. Well, change is the only constant, and Madhvi Puri Buch embodies that truth. Another woman at the forefront of the regulatory transformation in India is Ravneet Kaur, Chairperson, Competition Commission of India. Ravneet Kaur, the first woman chief of India's antitrust body CCI, had a career of over 3 decades as a Punjab cadre IAS officer. Her tenure has been marked by instrumental changes, including clearing the logjam at the competition watchdog and working on strengthening India's antitrust framework. In less than a year, Ravneet Kaur has already made significant strides in shaping the country's competition regulator. With more than 4 years left in her tenure, her leadership promises a brighter future for India's antitrust governance landscape.
Moving on then, over the past few weeks, ET Now and ET Now Swadesh aired a special series titled Small Giants MSMEs in the Spotlight. Powered by Ugrow Capital, this series highlighted the pivotal role of MSMEs in driving India's economic growth and the collaborative efforts of governments, banks, fintechs and other stakeholders in empowering this crucial sector. On March 9th, we're organizing a special ground event celebrating the conclusion of the series and spotlighting the instrumental role that MSMEs are playing in the growth of the country's economy. Stay tuned to the channel for regular updates of the same.
Alright viewers, with that it's time to slip into a very short breather on this edition of Market Cafe, but we'll take a look at how the Asian markets have opened up this morning. So you stay tuned, we'll be right back. Hi there, welcome back. You're still watching Market Cafe on ET Now. Now let's shift focus back to the oil markets, where Singapore GRMs have declined from $6.9 per barrel to $4.5. How will this impact the financials of Indian oil and gas entities? Let's take it across to Somit for more details on this. Somit, good morning. Take it away.
What we have seen overnight is a sharp drop in the Singapore gross refining margin, which is the Asian benchmark for refining margin, which also is kind of applicable for Indian oil refiners like Indian Oil Corporation, BPCL, HPCL, MRPL, Chennai Petro, and for that matter, Reliance Industries as well. So from $6.9 per barrel, the margins have now come down to $4.5 per barrel, and the margins now are at its lowest level since November 27, 2023. Now, from the 2024 peak of around $9.9 per barrel that we had seen in the month of Feb, Singapore gross refining margins are on a downward trajectory and have nearly halved from these levels. Now, we do not know the exact reason behind this drop, but the potential reason could be the increasing US refinery utilization rates that we have been seeing. Apart from that, analysts are also expecting a sharp drop might have come in when it comes to the gasoline margin specifically, because petrol or gasoline margins account for nearly 42% of the weightage when it comes to the Singapore gross refining margin. So what would be the impact of this on the Indian oil refiners? Now generally, if you see a $1 per barrel drop in the Singapore gross refining margin lowers MRPL's annual EBITDA by nearly 1,000 crore rupees. For Chennai Petro, it lowers their EPS by around 30%. For Indian Oil Corporation, BPCL and HPCL, it decreases their earnings potential by nearly 14 to 16%. And for Reliance Industries, if you see the consolidated impact on their EPS is around 4 to 5%. But do remember, the Singapore gross refining margins now need to trade around these levels for this impact to play out for this oil refiners. If they bounce back tomorrow, then there won't be much of an impact for the oil refiners going forward.
Absolutely. Thanks, Amit, for that roundup coming in. But the FMCG index has also been an underperformer so far this year. In fact, it is the worst sectoral index with 6% declines, even when the Nifty has been hitting record highs. So will this trend sustain? I believe you have some historical data that talks about this.
If you see the Indian benchmark, that is Nifty 50, has been scaling new highs every day, but FMCG, which is known as the defensive of the market, have been lagging. In fact, it is the worst sectoral index. It's down around 6% on a YTD basis, while the Nifty, which is the Indian benchmark, is up around 3%. So is this the worst start that we have seen for the Nifty FMCG? In fact, Nifty FMCG index? In fact, no, because in the previous years also we have seen multiple times that the index has started on a negative note. To be very specific, since 2002, if you see, 15 times the index has started on a negative or a flat note, and nearly 12 out of those 15 times the index has actually ended in green by the end of that calendar year. Now, if you see, what we have seen here is that on an average the index has declined by around 6% in those 12 years till March 6, but for the year the index on an average has managed to report a gain of nearly 16%. So a strong bounce back could be expected from the index going forward. And what could be the triggers for this strong bounce back? Firstly, the expectations of a demand recovery that is there from the second half of this calendar year, that is 2024. Apart from that, normal monsoons could be the one of the biggest trigger for the FMCG index, because that will lead to a revival in the rural economy. Election-led rural spend could also lead to a rural economy revival. Apart from that, the raw material inflation is pretty much controlled, which could give a boost to the margins of the company, and also premiumization could support the margins of these FMCG companies going forward. Now, if you see, the index is down nearly 8% from its 52-week high, and is trading below its 50 and 100 DMA, and is just 1% above its 200 DMA. So these could be the support levels for the Nifty FMCG as well. And nearly 9 out of the 15 constituents of the Nifty FMCG, if you look at their valuations, they are also trading below their 5-year averages currently.
Thanks, Amit, for that update coming in. Let's take a look at what the Asian markets are doing as well. When you look at the Nikkei, that opened 0.8% higher, breached its previous record of 40,314. And that's the move that we've seen coming in. Right now, it's just pulling back just a little bit. But that's the move you're seeing for Nikkei. When you look at ASX 200 as well, that rose 0.3%, also hitting a record high. So that is what you've seen coming in for ASX 200 as well. Now, on your screen, you'll also have Kospi, that rose about 0.6% thereabout. Currently, it's up 0.5%. Hang Seng not doing all that much, down about 0.2%. And when you look at Shanghai as well, that is also not decidedly, currently it is decidedly higher. Initially, it was just a little bit of an uptick that we saw coming in for Shanghai. Currently, it's up 0.6%. And when you look at the Nifty implied as well, yesterday we closed at 22,474. We're seeing Nifty implied pointing to a strong gap up open on a spot basis. And when you look at the futures level as well, yesterday we closed around that 22,602 level. So strong opening being indicated from the Nifty implied on a futures basis as well, Snehi.
Well, absolutely, very strong global cues and global handover coming in. So let's see if we are also able to sustain a day in the green for our benchmarks as well. But moving on, then, it is easy to say that the India growth story is well underway, since the vision is being matched by the construction of infrastructure that can rival that of any developed nation. Be it a taxi driver or a vegetable vendor, be it a student or a farmer, infrastructure has the ability to reset the bounds of what we dream and aspire. It helps redefine what the people of this great country think is possible, because Indians want to be more and do more. Today we bring you a story which shows you how the life of SMT Sukumati Devi from Chhattisgarh has been redefined with the help of Regional Sericulture Research Station CTRTI Jagdalpur.
Chhattisgarh is a story of transformation. A story through culture. This is the story of how a humble silk training center changed the life of a woman who single-handedly raised her family and constructed her identity.
बच्चना सुकमती है टाँक पालने रुआ 20 साल ने मैं तक पोसा के पालू है कीड़ा पालू है पोसा पाल तो काम कच्चा लागली हम जीवन आके बदल ली आदमी रहे का आदमी रहतो के आदमी दुख पड़ तो खत्म हो लो आमच्या घरने खातं पी तो काही नाही रे खूप परेशान होली बाली पिला का देत पडी करतो काय कागद पत्र पूरा है पड़ा हुआ तो है परेशान होते रहे मैं पैसा कोड़ी मांग ले पण देव आदमी देवत काय पिला जिला काय
Sukumati Devi had never imagined that the new infrastructure, the Silk Center, would be the beacon of hope that she had been longing for.
सुकुमती देवी एक हमारे ऑर्गेनाइजेशन के द्वारा एक अवेयरनेस प्रोग्राम हुआ था उसमें वो उपस्थित थी उस प्रोग्राम के दौरान उनको मिट्टी से शुरू करके सिल्क बनाने तक पूरा उसको समझाया गया सुकुमती देवी एक मिसाल है वो अच्छे से काम सीखी और अपने परिवार के साथ साथ अपना बढ़ोतरी भी की
Little did she know that this infrastructure would soon become the source of happiness in not just her life, but for her entire family.
मैं पैसा मन में तो पिलाजी लाख चाउर चुन घेन ले उन पैसा मन के संगाव रहे संगा पिलाजी लाख पड़ा ले फिर गाड़ी धर ले जानो टीवी आसे टीवी घर के छावलू साफ सफाई कर लू फिर छावलू लोग का बोलू आज मकान आए बते मैं चुका जाए भगवान हम गाँव च बाइले मन पूछला कहाँ जा साथ बतक नहीं हम पोसा सेंटर ने जाऊँ से बूता करूँ 4 आटा ना पैसा पाऊँ से बतक नहीं हम यूँ दे हम बोल करूँ दे मैं बोले से जमा बाइले मन या काम करा अपन पैर ने खड़े हुआ
हम चाहते हैं कि महिलाएं आगे आएं और हमारा जो कार्यालय है उनको सहायता प्रदान करें और अपना पैर पे खुद खड़े होकर अपना पहचान बनाएं यही है हमारा इंस्टीट्यूट का विजन
This story illustrates how a modest piece of infrastructure like a silk training center has transformed the lives of people in the rapidly expanding state of Chhattisgarh.
Sukumati Devi made the decision to be more and do more for her family, inspiring women across to achieve more. Her life demonstrates the positive influence that a modest training institute's framework has had on improving her life. Such stories make us realize that जब तक बनता रहेगा India, तब तक आगे बढ़ता रहेगा India. For this reason, Ultratech Cement and Times Network firmly believe that बनेगा तो बढ़ेगा India.
Welcome back. You're still watching Market Cafe on ET Now, and well, now it's time for the mega ET Now exclusive with none other than the Reserve Bank Governor Shakti Kanta Das. In a detailed chat with ET Now's editor-in-chief Nikunj Dalmia, sounding extremely bullish over the state of the Indian economy, he says that there is every possibility that growth may even exceed 7.6%. The optimism doesn't end here. Governor Das said growth could be closer to the 8% mark in the current fiscal. Here's an excerpt from that chat. Let's listen in.
Inflation has been brought under some kind of a control without sacrificing, without sacrificing or without paying the kind of heavy price which perhaps some of the economies have paid to bring back, to keep inflation under control. So therefore, if you look overall, in terms of growth, in terms of inflation, in terms of other macro parameters, I think it's perhaps one of the best confluence of factors. But having said that, this is a philosophy which we follow internally. There is no room for complacency at all, because a problem can suddenly arise from any corner of the world.
But looking at the current set of data points and the macro circumstances, can I say that you don't see a problem which is on the horizon? If there is an external shock, something unknown which we are not privy to right now, that could be an episodic issue. But looking at the data points and the permutation and the combination, you don't have a problem on the horizon per se.
Excepting that geopolitical crisis, new flashpoints can originate any time. There are weather-related challenges, weather events which can happen and which do happen without much advance notice. Excepting that, at a structural level, I don't see any major problem. But as I made a reference in the last MPC statement of mine, I think global debt, it's not so much a problem in India, because I think our debt to GDP is at a certain level and it is expected to moderate. But if you look at global public debt in some of the advanced economies, I think with their large fiscal deficits and with their large percentage of borrowing, with their large percentage of debt to GDP ratios, and if this continues, it can pose pose bigger challenges, particularly to the emerging market economies. But that is not something which will affect India immediately. And also, I think among all emerging market economies, India is much, I am repeating the word much consciously, I think India is much better prepared to deal with such challenges.
Governor, the Reserve Bank of India was clearly ahead of the curve when they released their GDP projections for FY24. RBI number was 7. The consensus number was 6.3, 6.4.
That's right.
Post the last GDP trend, will RBI remain ahead of the curve and upgrade their FY25 GDP estimates also? Is there a case for it?
Well, I mean, the next monetary policy is just about a month away, and our research teams are working on the, on the inflation and on the GDP numbers. So I don't want to preempt what conclusions they will come up with. So far as current year is concerned, the momentum of economic activity has been very good, has been robust, and we are now in the first week of March. Given the kind of momentum of economic activity, the growth momentum which we are witnessing, and the kind of high frequency indicators, the data points which we keep getting on a continuous basis, I would not hesitate to say that there is every possibility of the 7.6% growth for the current year being exceeded. And I think there is quite a good chance of the growth GDP number for the current year being very close to 8%. Now coming to next year, we have given a growth projection of 7%. Other forecasters, including international agencies, have given much lower projections for next year. For next year, we stick to 7%.
Similar to quote your last interview, you said that fintechs are like Ferrari. India needs still an efficient small car. So can I assume that now that SROs are being set up, RBI is essentially looking at extending the regulation in fintech? The soft touch era is over.
If I can digress a little bit, I think the Indian speed today is not like a small car.
Right.
India's economic growth and the way India is growing, I think it is the Tejas speed, the Tejas aircraft speed.
Right.
I think, we are experiencing. But coming back specifically to this question, you said that...
is the soft touch era over?
I mean, we don't want to slow down any economic growth. We don't want to slow down the growth of the financial sector. We are completely focused on the growth of a robust financial sector, the growth of the financial sector on a sustainable basis.
Moving on then, that was indeed the most comprehensive interview like we've been calling it. But moving on then, some cheer for credit card holders. Customers can now choose the card network when opting for a new credit card rather than the card issuers. As per the new RBI norms, this is to ensure greater choice and flexibility for credit card holders. So banks and non-banking institutions as well are not allowed to enter into agreements with card networks that restrict customers from availing other networks' services. The circular is effective in 6 months' time, but this norm does not include issuers with less than 10 lakh active cards or the ones that have their own card network. But moving on then, an offer for sale is set to open for the state-owned Navratna coal mining company, NLC India. Government is looking at offloading almost 7% of its stake via the green shoe option. Gaurav gets us all of those important details. Gaurav?
Well, yes, NLC is definitely going to be in focus because government is going to divest 7% of its stake from NLC. And the proposition is going to be that the government will first offload 5% of the stake with an option to offload 2% more if the demand is there. Now, from this stake sale, government is expecting a fundraise of 2,200 crore rupees and the floor price is decided at 212 rupees, which is at a discount to the current market price. If you look at the previous divestment investment activities also, we have seen like 6 companies where government divested from in FY26. In FY22, we have seen 3 companies and in FY24, we have seen 4 companies from where government divested its stake. And the major to name were like ONGC, from where they raised around 3,000 crore rupees. And this was followed by HAL, which is Hindustan Aeronautical Limited, IRCTC, Paradip Phosphates. Even in FY24, we have seen almost 8 companies from where government has already sold its stake and raised money worth 12,000 crore rupees already. And a few to name were like Coal India, where government raised 4,100 crore rupees, followed by Hudco, Erida, RVNL, SJVN, IRCON, NHPC, and lastly Hindustan Aeronautical Limited. So let's also look at how the companies have performed. So there are few companies where government has a largest stake, more than 95%, which are KIOCL, Punjab and Sindh Bank, LIC, Indian Overseas Bank and UCO Bank. And if you look at the performance also, all these companies have delivered at least 2 times returns for the investors in the last 1 year. And lastly, let's also not forget that government has a target to divest of worth 50,000 crore rupees in FY25 as per reports. And lastly, we also know that PSUs have shown a very huge run-up, and let's also look at some companies which have outperformed majorly in the last year, and a few to name were like IRFC, where we have seen 400% returns, Hudco, IRCON, REC and RVNL, where we have seen more than 200% returns in the last 1 year. So all in all, if we look at NLC also, the stock has performed almost 2 times. It has given returns of 170% in the last 1 year. So it is definitely worth keeping an eye on NLC to see how the stock performs now that the stake sale is on the table.
All right, Gaurav, thanks so much for taking us through that. But with that, we'll slip into a very short break of this edition of Market Cafe. We'll be right back with more news, stock-specific news and updates, so you stay tuned.